one creative way that we can do is you can buy just the standard term of insurance, typically a 12-month policy. And then if it's in the standard market, there's typically no penalty or very little penalty. And then if it's in an excess or surplus market, sometimes there's a minimum earned premium. Really just, an amount of premium you have to get over that the carrier is going to retain if you do cancel.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Micah Mattox provides real estate investors with value-add insurance programs across their portfolios. Micah, welcome to the show.
Thank you so much for having me. Great to be here.
Hey, Micah, there are 3 questions I ask every person who comes on the show. Can you tell me, in 90 seconds or less, where did you start, where are you now, and how did you get there?
Absolutely. So I started about 10 years ago doing personal insurance. About 8 years ago, I started working at an independent agency and got into the world of commercial insurance. And from there, got really, really heavy into the real estate world. And for me, it's been one of those things. Once I started working with real estate, really, really nothing else was attractive to me. There's a lot of great industries out there and everybody needs insurance, but real estate's just one of those things that makes sense. So like I said, it was kind of one of those classic, love at first sight stories,
Was it challenging to jump from the personal insurance side to commercial insurance?
The components are the same, so there's a lot of similarity, but for me, there was much more complexity on this side of things, in commercial insurance and, real estate insurance. And that was a good thing. It provided, those puzzle pieces to kind of put together, and it created the challenge, just something to kind of work on. Personal insurance is pretty similar. If you've done one house, you've done a lot of houses. And if you've done one car, you've done all of them. So.
Right. Now, insurance is an eat what you kill business, right?
Mm-hmm. That's true. Yeah.
Was that a hard leap where you're like, okay, cool, I've got to go from underwriting, your house or writing a policy on your house to now I got to go find an apartment complex worth $30 million and actually write a policy on it. What was that transition like? Well,
I mean, just like anything, just like any entrepreneur who has a business or, anybody who goes that direction, I think it really comes down to just that business sense and that fire in the belly, like I'm going to make this work. And, that really accelerated my learning path. I said, hey, I've got to learn this. It's putting food on the table, so to speak. So for me, I know that was a really big helper, actually. I think if I had 10 years to learn it all and just everything was all good to go, then I wouldn't have gotten to where I am as fast as I am. So.
What would you say is the most surprising thing that you've learned 10 years in the business that you didn't expect?
Ooh, that is a really good question that I did not expect. The markets to change like they have. I guess that overwhelmingly just in an overarching, decades since the markets. You kind of think of insurance as one of those things, a lot of people don't know what goes on the back end. You walk over to the shelf and you get the piece of insurance and you pull it down and sit down the box and there you have it. But it's so much more of a complex product and that there's so many things, for example, we're right now looking through different white papers that industry partners put out on things like, the cat season, hurricane season in Florida and, in cat exposed areas and things like that. And just what impact that has not only over a year-over-year basis, but even years into the future. So just the complexity and the intricacy, frankly, of the market has been really surprising to me. And just there's always some new factor that just plays some kind of nuance in it. So I think that's the thing I didn't expect most.
And do you feel like that is that complexity comes from the assets that are being insured, or does that come from the companies that are doing the insuring?
It's all over the board. So the assets themselves, I don't know that the assets necessarily are changing, but you're having bigger and better and more beautiful and more expensive assets coming on the market. New Class A properties. So there's just more more structure there sometimes to have to work with, and maybe more technology integrated, new building styles and things like that. But at the same time, it's very much heavy on the carriers. And insurance is such a reactive business. It's something that they're doing the best to predict what they think is going to happen, but ultimately you kind of have to go through it to know where it's going to land. One thing that's interesting right now is I'll take Florida, for example. Every insurance carrier operating in Florida is operating at nearly a 200% loss ratio. And really, in layman's terms, all that means is for every dollar they're bringing in, they're paying $2 out. And for all of our entrepreneurs out there, that of course is a very bad business model. So just not something that's sustainable long term. So all these carriers constantly have to figure out new ways. Okay, how do we upright the ship? How do we stay on course and just even remain a business, not even remain profitable, but how do we even just stay on the board? So I think it's been really interesting to watch all the strategies that carriers employ, and a lot of carriers are actually very, very willing to help. I mean, at the end of the day, if somebody can't afford their insurance, well, they just put themselves out of business at the end of the day. So they're constantly coming up with new ways to say, okay, how can we make this more affordable? How can we help our insureds? How can we do those things? And it doesn't seem like that always. If the rates are going up, it just seems like, okay, they don't care. But a lot of carriers are taking extra steps and really, really working overtime to try to go that direction.
That's really, really interesting. I think that's it's a topic that nobody really thinks about. For us, being the ones that are writing the check, you just go, yeah. You kind of think about it as, like you said, you walk up to the shelf, you pull it off, say, okay, that's my insurance product. Okay, it does X, Y, Z, and then we hope that we never have to call you or talk to you again. Yeah. Like for us, it is an expense, and we want to leave it that way. But obviously that's not the case. Can you tell me, when I say these two words, what is it, can you define them for me, and why they're important in the insurance industry? When I say quality and availability, what does that mean to you?
So when it comes to something like quality, and this could go for any product, but insurance specific, not all insurance is created equally. And it's all the small components of the coverage and how much coverage and how it applies that really build the policy. And it's one of those things, just like you said, with this just being a cost, an expense that you all have, in the industry. It's one of those things that you say, okay, how can I get this down? And there are ways to get it down. I mean, you can get it really, really, really inexpensive, but again, you're getting a really, really, really inexpensive insurance program when you do that. So again, from a quality standpoint, and it takes some people going through something, and heaven forbid something bad happens. That's nobody's favorite day. But if something does happen, they go through it and they're able to see the efficacy of an insurance program that is a quality program, that they're sold. They don't take any more convincing. But I think for some people that just haven't really watched it play out, or even worse, people that haven't had a great experience, whether it's an agent or whether it's a carrier that just something didn't go quite right, that they really don't see the value in it. And then when I say availability, and that can mean different things too. That can mean the carriers that somebody's going to, and then there's something called capacity in insurance. So if you think of insurance kind of like a line, 0 to 100%, that's our availability of insurance. Well, different agents, different carriers, different brokers, the way that they allot that amount of insurance and even how they allot it through the year can be a complex process. And without getting really far in the weeds on that process, that there's sometimes where capacity, the availability of that coverage can get a bit scarce, and that just reduces the overall market. Instead of having more carriers to go to, you're operating with less, and you're just kind of having to make do sometimes. So just like anything else, it can be a numbers game. If I have access to more carriers, and if I have those relationships, in this instance, then that's something where we can often render a much better product at the end of the day.
That's something I've never thought about, is that there are probably buckets or, percentages that an insurance company will say, okay, we're going to devote whatever it is, make up numbers here, 20% to multifamily. And once we're done whatever the dollar amount or percentage is for the year, we've filled that. We're no longer insuring that asset type this year. I mean, is that sound about right?
Along the right lines, and it can even shift from there. So the capacity operates off of a principle called reserve. So basically, just the money they have in reserve to pay claims should they arise. And right. A lot of this is extremely heavily regulated, as I'm sure you'd imagine. But with that, they have to have certain balances and remain within certain brackets. And again, it gets to be a really complex process. But even understanding that kind of helps us to realize, when I buy my insurance can be important, and where and how, and all of those things can play a role into that.
I mean, so we're buying a property. I need insurance. I don't have a choice when I buy insurance. Yeah. So I guess, how does that affect us as the end user, and then how do we effectively navigate that in a meaningful way?
Absolutely. And just like you said, when you're in that due diligence period and when you're closing, you're kind of locked in a period like that. You just don't have a lot of options. So But there's a couple creative ways that we can approach it. So one creative way that we can do is you can buy just the standard term of insurance, typically a 12-month policy. And then if it's in the standard market, there's typically no penalty or very little penalty. And then if it's in an excess or surplus market, sometimes there's a minimum earned premium. Really just, an amount of premium you have to get over that the carrier is going to retain if you do cancel. So sometimes we can say, okay, buy the insurance, 3 months down the road, 6 months down the road, we're going to re-engage, go back out to market and hopefully get a different result. Another option is that some carriers will allow you to buy a short-term policy. So you may say, okay, it makes sense to buy a 6-month policy or something like that. Now, that gets tricky because a lot of lenders don't love that. So sometimes, sometimes that's not a great option, but in some scenarios it can work. And then even down the road, that there's people that are taking advantage of master policies. So if you have a lot of assets within a certain area or within a certain type, we can often aggregate those onto a policy. And it just really, really helps out in an operational sense and in a cost sense as well, because you're able to buy down that price, per door, per unit, per property. Like I said, there's just a lot of different options, and having those options is what really makes the difference when it comes to today's markets, because sometimes it's that one extra step, it's that one extra carrier that allows you to get where you need it to be. And if you don't go there and don't try, you won't know.
That's exactly right, and that's why we need people such as yourself on our team, because I'm not going to figure this out. I'm just not. It is. Hey, Micah, what do we do with this? Because our heads and hands are full of lots of other things besides worrying about the best way to establish our policies across all of our different properties. So what are some nuance or some case studies? Anything come to mind? You said, hey, this is something really unique. I think our listeners could learn a few lessons from.
Absolutely. And I guess the first thing I'd like to mention is a case study of a smooth closing process. And I think that's something that a lot of people are probably familiar with, but some are probably familiar with a much different process that is maybe a little bit more drug out, maybe isn't quite as smooth, unfortunately. And, one thing that, having your ducks in a row and just kind of knowing, what to do where, and again, so realprotect, who I'm with, that's all we do is realprotect and investor related insurances. That's 100% of it. So that allows us to, we're in it every single day. It's not a part-time hobby or something we touch once a year or quarterly. It's something all day, every day that we're doing. So, knowing, if we can come to the table, if we know what documents to ask for, we know what process to take, we know how to put things in sequence, and then just how to relay that to the carriers. Hey, this is the deal. Here's the importance of it. And, especially, there was a deal not long ago where we had to meet I think it was a 12 p.m. closing, and it's something that I think we got maybe 48 hours notice on. It was very quick, but we can still help in scenarios like that. But I think we got 48 hours notice, and by that Friday at 12 p.m., if they weren't closed, it was a 7-figure loss that the syndicator was going to take. And we were able to relay that to the carriers and the underwriters, who then even ran that up the ladder to their management, and were able to pull a few strings and make that happen. So, and again, that's an extremely tight closing process. We like a little bit longer if we can, where it's possible. But even in a scenario like that, there are things that we can do to still be successful. But like I said, one of the big ones is just knowing how to manage that process. And I think for a lot of agents, it's a passive process. I think they're kind of sitting in the back seat, waiting to be told what to do. But if you get an agent who can really just grab it by the horns and say, okay, here's what we're going to do. Here's the process, lender, here's exactly what you want to see, and here's how I'm going to make it happen. That makes everybody's lives easier. It gets you closed. It's just the smoothest thing in the world. And sometimes there are things that pop up out of everyone's control where that just isn't a possibility. But more often than not, I think people would be surprised how smoothly it can go with the right controls.
What are some things that we should be doing on this side of the table to make sure that process does go smoothly?
So for an insured, I would say a couple of big things are, and sometimes, once you've been through it a couple of times, oftentimes the process is pretty similar. It's not like we're reinventing the wheel each time oftentimes. So the availability of information, insurance, these carriers and underwriters, some of them are operating with 200 accounts, 200 closings effectively is how you could look at it on their desk at any one time. So the biggest thing that you can think of, if you're in that position is, okay, how do I get to the top? How do I make myself and effectively my account, my property, how do I make it attractive? Well, oftentimes that's by way of information. Underwriters aren't going to fly out there and go tour the property, much the same you all do. That they're going to say, okay, what information can I find? Am I looking online? Am I looking at, OMs and PCAs and PSAs and, appraisals and just anything else, data, how much data can I get a hold of to make myself and my company comfortable with the insurance on this? And I guess to that point, to come full circle on that question, that's something that you could do or any insured could do is say, hey, I'm going to take an active role in gathering information just as fast as we can, because that oftentimes is unfortunately a holdup. If we say, hey, we've got to have these documents to do something, and then it's 7 days or 14 days or 21 days later before we get them, and sometimes again there's no way around it. It just is what it is, and you have to roll with the punches. But if there's any way to expedite that, again, sometimes that's just not something we can do. But if if the syndicator, if the insured can do that, that often helps out massively. And just like I said, really smooths along the process. And the smoothest closings I've been a part of have just acted in symphony. You've got the insured, you've got the syndicator that's just doing all the right things and assisting. You've got the agent that's just in the driver's seat making things happen. The lender is responsive. It goes so smoothly and just acts like a symphony.
That's really, that makes a lot of sense. It's just, being prepared and getting information back to you in a timely fashion will keep your file at the top of top of the stack. Any other examples or situations that you can think of that are were scenarios that we can learn some things from?
Well, in that regard, there's no shortage. We have seen all kinds of different things happen. Both from claims to closings to just different things, and probably a little bit further than we have time to get into today. But just also having somebody who is a resource. One of the things I commonly hear from people is, hey, I try to call my agent and maybe don't get a lot of response, or I don't feel like I'm getting options. I feel like they can do it, but maybe I'm not getting the options, and maybe I don't understand, at least a macro level, really what I'm doing and what I'm paying for. So just being able to go through those scenarios and that there's an insurance commercial, we know a thing or two because we've seen a thing or two, which, not to piggyback on that, but it is very true. That the more experience you have, especially in the related industry, the more stories you can tell, the more case studies you have, and also the more pitfalls we can say, hey, the reason why we probably don't want to do this is X, Y, Z. We've seen this happen, and we want you to avoid that. And again, that's a value add that we can throw into the scenario as well.
All right, last and final question here for you, Micah. And this might put you on the spot, and I'm sorry if it does. If so, we'll cut it out. But what is your thought, or what are your feelings towards independent adjusters?
So independent adjusters can play a very important role, actually. So, earlier in the conversation, we talked about there are some agents or some carriers, who don't always maybe have all the facts. And I like to always assume the bright side, so we'll assume they don't have all the facts and they just, they need some uncovering. There are some, and again, this is where it gets complicated. And, there are some people who maybe just don't operate in the right way. And that could be a carrier, that could be an agent, it could be whoever. And independent adjusters play a vital role because they're there on behalf of the insured. Their fiduciary is to the insured. That's who they're there for. And, just like an agent should be. And they are, at the end of the day, that they play a vital role because, they can come out there in a scenario where something hasn't gone right, or sometimes, just where it hasn't been fast enough, and they can assist because, again, that's what they do all day long. So it's one of those things that, are there times where it's abused? Perhaps, that I'm sure does happen from time to time where, somebody gets a fair assessment and just says, oh, that's, there's no way that's enough, or I just don't like it, but then there are times where people don't get a fair shake at things. And that's a much needed thing. And I think they kind of get a bad rap, just for, not being there on behalf of the carrier and, just, because of their role. But like I said, there are certain scenarios where they're needed. So.
Right. No, that's great. I appreciate that answer. That's awesome. I generally get a feeling one way or another, depending on which side of the table you're on that equation, where it's like, no to independent adjusters, or like yes to independent adjusters. So I think that's, you've given us a very clear answer on that. And thanks for doing that. Certainly appreciate it. Micah, if our listeners want to get in touch with you, learn more about you or the services that you offer, what is the best way to do that?
So by email, phone, or I'm actually really big on LinkedIn. I like to be on there a lot and just interact with people and network and things like that. So I'm very big into using that platform. So, a direct message or a comment or anything like that, I'm extremely responsive.
Awesome. Fantastic. We'll make sure we include all of those items there in the show notes. But for those of us who are just listening, if you don't mind, what is either an email or a phone, whichever one you feel comfortable sharing here on the show?
Absolutely. So phone is going to be 770-718-5105. And then my email is first initial last name. So M followed by my last name, Mattox, Mattox, T as in Tom, T as in Tom. And that's at realprotect.com.
Awesome. Fantastic. Micah, thank you again for your time today. Do appreciate it.